Hi there. You are looking at a world-class institutional grade model template from Sapp Capital Advisors. Now, this template specifically focuses on multifamily properties, that is, residential apartments. This is for multifamily single asset acquisitions with optional value added mixed use, meaning you don't need to do a commercial or a value add component in this deal, but you can if you want to. The functionality is there. This template is just one of many examples of models that we build for our clients on a daily basis. And when you contract with Sapp Capital Advisors, you don't only get access to our near decade of experience in real estate, private equity, investment banking, and now consultancy. You also get access to a library of frequently maintained, robust, clean, and precise Excel templates that represent the highest bar possible in institutional real estate financial modeling. And you'll see why as we go through this model. So diving into what we're actually looking at, this is the summary sheet of the model. This summary sheet prints out nicely. That's just one detail that we always make sure works in our models. The summary sheet starts with the two most important assumptions. You've got purchase and sale assumptions. Your purchase price and when are controlled up here, and your exit value and exit timing are controlled here. Before we get a little too confused by what's going on, everything that is blue is an input. Everything that is black is kind of a formula or less important to change. You don't have to change it every time you get into the model, basically. And things that are green are links to other sheets. If that feels overwhelming, don't worry. We have an entire sheet in our model and we're available to discuss these nuances. But this sheet called Wizard explains these colors and how to read our models. We'll get into that later, but there is a guide in every template that we produce that would walk you through how to change and update the model on your own. And it has explanations of these kinds of conventions. But just so you know, everything blue on this summary sheet is an input that you can change, and then you just refresh the model. Now, to refresh our models, you press F9. Sometimes you can go to formulas, calculation options, and you can choose automatic or manual or partial, but we just leave them on manual while we work. It's a particular preference of ours. So you can set the purchase and sale here. Now, if you change the purchase price, you'll see in your cash flow sheet, which again, this prints out nicely onto 2 pages this time, but you can see your purchase price is in the cash flow right here under total acquisition basis, and your exit value is right here. So you can see 86.7 total acquisition basis, and then right here, there's your total acquisition basis. So you can change your purchase costs and you can change your purchase price right there. And if you do, let's say I make this 82 million, pay attention to the returns here. Go from a 26.3% IRR, and now if I can see that here too, if I refresh my model, it goes from 86.7 to 83.640. Now, a couple things just happened. My returns changed here. They also changed on the summary sheet. And then I got a little 1 in this cell A1. Now that's a check error. Every single sheet in this model is connected to the global check error aggregation. What this error aggregation does is it flags an error in any sheet on every sheet. So every sheet has this cell A1. A1, the most obvious cell, the very first cell in every model, will say if something's wrong everywhere if something is wrong in any sheet. It does this with a simple mechanism in this sheet called checks. So we can see that the change log sheet has a problem. And so that causes the 1 sheet error that we see here. And so if we follow through this change log, we can go down here and we can see that a couple things have changed, that our purchase price has changed, that our returns have changed since the last entry, and about it. So I'm going to say updated purchase price again. So I'm going to take that. I'm going to copy the latest one from this row that says live, and I'm going to paste values. I'm going to refresh. Now that error goes away because I just changed the purchase price. Now let me zoom out. This is one of those touches that might seem tedious at the start, but it is an institutional solution that allows you to track every single important change in your model from point A to point B. What might be point A to point B? It might be your initial underwriting. It might be your first quarterly board review. It might be your 36th annual board review. against the initial underwriting assumptions if this is a very long hold term asset. Anyways, that sort of data allows you to operate with a deep level of understanding. And if you have people working with you and passing this model back and forth, something like a changelog is super helpful to understand if things have moved, and if so, why, and who made the change. So it's super helpful, and it allows you to build these cool charts that show the changes and things over time, so people who are less in the weeds of the model can still understand every single movement. And it's very helpful, and that is just one other example of the institutional touches that we bring. The other types of checks that might flag in cell A1 are going to be in the bottom of every sheet, and they're called local checks. Now, these are obvious things that should always make sense in a model, like revenue less expense should equal NOI. So we don't have to go through what those are, but we have these checks checking for equivalencies between sheets. And if they ever flag, it means something's wrong in your model and you should figure out how to fix that check. Obviously, that's usually our job, but if you're running this model on your own, you can rest assured that as you play with it, so long as these checks don't appear, and so long as you log all your changes in your changelog, your model's working fine. So that's a quick overview of changing something in the model. Let's keep it moving. Here you'll see sources and uses. This is basically what are you spending all your money on throughout the project, and how are you funding it. The sources of funding that we have in this model are your equity and your initial loan for your T0 sources and uses. So that's going to be your sources and uses. For the returns, we just have unlevered returns, levered returns, GP net returns, and LP net returns. Those returns are controlled by these waterfall assumptions here. You have a preferred return tier. This one's up to a 12 with a 5% starting GP equity balance. Say your GP is going to put money in. They could also not put money in. You have a tier 1 on the hurdle. So the hurdle rate goes from a 12 to a 20, and the GP gets promoted 15 additional percent for a 20-80 split. And then thereafter, so after the last tier, which is after a 20% hurdle, the final promote to the GP is 25% and the LP gets 70%. We don't need to spend too much time in this sheet, but that's all controlled on this sheet called Waterfall, where you could get into the weeds. This is the annual view of the waterfall and how it works. There's monthly cash flows for everything in these models. Everything always we build is on a monthly basis, unless specifically requested by the client. What else do we have here? So we also have a refi loan if you want to have a refinancing. Say you have a big value add stabilization plan, so you want to replace an initial loan that might be a bit more expensive or based off a lower entry NOI. You could always have a refi down the line. And then for your waterfall, we covered that. And then these operating assumptions are summary numbers. So let's keep moving to the other sheets. This is your operating sheet. I don't want to spend too much time here, but this is where you control your NOI. Again, anything that's blue is an input. So this is your residential NOI. Here you can control predominantly just the expenses and some other income items on this operating sheet. That's because your rent roll and vacancy are going to be controlled elsewhere. That's why they're green. This year 1 column for operating expenses are going to be how you control the various operating expenses in your residential NOI. And then for commercial, everything is controlled elsewhere, and we can explain that down here. So I'm going to open up the model part now. So if you want to change any of your year 1 expenses, you change them here for resi, and then commercial NOI is all controlled elsewhere. So your operating assumptions for your commercial are here. You can input your CAM income and your OPEX here, and the months that they are set to begin can be controlled here in this G70 and G71 if you were perhaps needing to have that start at a different time. Your residential income growth rates are projected here. You've got a vacancy percent. They're projected by year, so you can change everything by the year. Your residential expenses are all also controlled here. You've got growth percentages for real estate taxes, insurance, and utilities. Your operating expenses have different growth rates, and your management fee is driven as a percentage of your effective gross revenue. And that's the quick overview there. You can type in whatever notes you want into these columns. We have purple comments that just let you know how to use these models, and they're written in there. And if you wanted to add some reference only metrics, you could add a T12 here. We also have a stabilized NOI calculation for untrended stabilized NOI, which we use for your going in cap rate. If you don't know what that is, that's basically what your NOI would be if you snapped your fingers and everything was stabilized vacancy, it was fully renovated rents, everything just magically happened, but today without any of the growth into the future. So you have rent roll inputs. So on the residential unit mix, you have everything you need to control your unit mix. This you can do a unit mix as big as you want. You could grow this section. We can add as many units as we need. Every unit can have its own entry in the unit mix for the resi, or you can summarize them by type, which we've done in this example. Either way, this works for both. You control what the current occupancy of the building is. That helps you understand how to trend your occupancy or vacancy really going into the future, so that you maybe, if you're in this case, you're 25% vacant. So you probably don't want to go straight into a 5% assumption for year one. You probably want a smooth curve as you renovate and fix that vacancy. You can apply different reno costs per unit, which then lead to a total renovation budget, which is spent on timelines that are specific to the unit type. So if you have different renovation expectations for different groups of units, you can group them accordingly and apply different start dates and renovation durations. And you can set pre-renovation rents and post-renovation rents. Now, if you don't want to renovate any units, you can just set all of this stuff to zero. You can zero out the reno cost per unit. You can set the post-reno rents to be the same as the pre-reno rents, and you can call all of your units already renovated, which would then not have them go through a renovation cycle. So that you would then be able to look at your cash flow and see that this resi capex plus building general capex would then be zero if you turned off renovations, and that your gross potential rent would then grow at a rate that is only equal to your potential rent growth percent that we have in here. So that's just a quick example of how to play with that, and that's on the RR input sheet. The next thing that you control on the rent roll input sheet is the commercial leases. Again, you can zero all this out. You can make them zero. You can set the total TIs to zero. I wouldn't recommend deleting the rows unless we're doing that together. We can always add and delete rows together. It doesn't take us too long to do that sort of work. But if you're doing it yourself, you might break some things. So just zero things out generally if you don't want it. But these are your commercial leases. You control the size, the start date, the lease length, the triple net rate per square foot, and the annual steps and the leasing commissions, which do take into account the annual steps over the full lease length in the USA style. You have a LC spend amount and the date that the lease commission gets spent on if you need to customize that. And then the TI, we just set a total TI, which you could just also type equals 75 times square footage and into that cell too. It's just a blue cell. It doesn't mean you have to type it. You can still use formulas in the input cells. And then you have a date that the TI is spent on. So that is how you control your commercial leases. That all flows. Again, we've seen all this, but here's your cash flow sheet. All of your cash flows, so up here, your residential cash flows, these are controlled by the residential income line items. The operating sheet, they're controlled here. You can see those TIs and LCs that we were playing with are happening right here in this bottom section of capital events. Ultimately, every single thing that we just talked about that's a control is flowing into this cash flow sheet and determining your levered IRR at a project level. Once you have a project level return, you then flow that into the waterfall, which we discussed enough earlier, and that gets you to your waterfall results. Now, finally, that all feels like a lot, and that's why we're here. And when you work with us, you get access to these templates. We've got a few ways that we typically collaborate with people, which you can find more detail on our website about that. But let's say you got this model and you really want to run with it yourself, or you want to have your analyst understand it. Totally valid. We're more than happy to work with you and to help train your team so that you can just use these things on your own. We're here for however much you need us and nothing more, right? This sheet I mentioned earlier, it's called the wizard sheet. This sheet actually goes by every single cash flow that you just saw. So this cash flow sheet, which determines your IRR, which flows into your waterfall, has every cash flow on it. This wizard sheet also has every cash flow on it, and it explains how to play with every single cash flow that you see in the model. So if you prefer, you can just read top down from this wizard sheet and it'll tell you, oh, you want to change payroll, follow this cell. So you hit control plus open bracket on your keyboard. That's the square bracket, the one that's near the enter key. And you can actually jump to the part of the model that controls it. Now, if you want to go back, you hit F5 and you hit enter. And there might be another part of the model that controls it. That's why there's two references. So in this instance, it also is controlled by the growth rate per year, that payroll expense. So that's just how this model works, fully enclosed. And our goal is to empower you to use and understand this as much as you want, or you can just have us do it for you. It's really choose your own adventure there. I hope that this explained and demonstrated why our models are a step above anything else that you might find from the competition. They represent nearly 1 decade of innovation and constant focus on lots of deals, billion-dollar deals, all sorts of asset classes. And again, this is a multifamily template, but we do it all. So we're very excited to see what comes of this and for you to reach out and get in touch. These are all just the pages we already walked through. I'm just showing them to you so that you can see how good they look and how out of the box you have a model that you can print and review. And you can feed this into much better looking presentations. This is the numbers engine. There's ways to get these things connected so it's all seamless. And we are pretty certain that there isn't much that we haven't already seen or had to deal with. These things are ready to go if you want to send them to investors, if you want to keep them internal. There's all sorts of advice and thoughts we can share. So we look forward to you reaching out. Thanks for making it all the way into this video. It's been a pleasure walking you through this, and we hope that you enjoy the model as much as we do. And this thing will continue to evolve and grow as we encounter scenarios and circumstances, and we only want to make them easier for everybody to use and full of more features. This is Edward Sapp from Sapp Capital Advisors. Get in touch. Find us at www.sapp.capital. We'd love to learn what people are up to in real estate and how we might be able to help. Have a great day. Thanks.